DATs have been just killed, right? DATs are dead. Like, I mean, it's been a bloodbath. Our stock is still up 1,000% this year. About 80 days from our first initial idea conversation to announcing, taking the company public, it was just like, this seems like an opportunity, and we went for it. I think the 4-year cycle is dead, and I think now what we have is an asset class that is just mega high beta NASDAQ or mega high beta tech. I do think Solana's going to flip Ethereum. Do I think Ethereum's going to die? No, but do I think there's this disparity is warranted? No, I think the gap's going to close.
Would love to just run us through kind of the whole story, maybe starting with DFDV being a first mover, really like kind of the first to market Sol DAT. I remember being at Solana Accelerator in May in New York, and that was when the DATs first started going crazy, and DFDV was leading the charge. So I think interviewing first movers and the people behind those companies is always really interesting. Like, maybe what was the origin story that led you to start DFDV with a couple other folks, and what were the things that gave you the conviction to make that leap and be the first mover in this kind of market?
Candidly, it was pretty simple and straightforward. It was, hey, look, MicroStrategy has been successful. They survived the whole cycle. They came back better than ever. People seem to love the idea. The ETFs didn't kill it. There's something else there. Solana as a productive asset allows you to do a whole bunch of other things on top. So you take the MicroStrategy playbook and then you can like do other stuff on chain. And so it was with that loose idea. I mean, it was a 2-page strategy doc that Joseph and I put together, and it was like, all right, seems like a good idea. And I guess as with, people in crypto, like we take an idea, read about it for a short amount of time and just, eat it, right? And so I wouldn't say this was a, year-long deep search in the cabin in the woods trying to come up with the perfect idea. It was just like, this seems like an opportunity, and we went for it. And I think there's these things in life where it seems like a good idea and you start taking the steps down the path and you just keep getting more confirmation. And so you build this momentum towards sprinting. And so you start walking down the path, and then like things get better and better and better. And so you just like accelerate through. And I think it was kind of one of those things where we, so an example, Joseph and I kind of discussed the idea on like a Thursday in late January. And then by like that Monday, one of his buddies had a target company, a shell company. And so we talked to the founder of the shell company, and he was like, yeah, let's do a deal. And so it was about 80 days from that conversation, like our first initial idea conversation, to announcing, taking the company public. We never talked to any banks. We didn't conduct this full search for a whole bunch of, small companies that might want to do a deal. We just like met a guy. He was super agreeable. Blake Janover. He's great. He's our chief commercial officer. He's still on the board. We love him, talk to him regularly. And so that was just kind of this like serendipitous, like perfect thing. And so the genesis was really just idea and sprinted forward. And here we are today.
For sure. Yeah, I definitely agree that sometimes the universe or God or whoever else just kind of puts some signs in your path that's like, you should definitely go pursue this idea.
Absolutely.
So I think that makes a lot of sense. It seems like a lot of the founding team of DFDV that got behind this idea was from Kraken. So maybe talk to me a bit about like what it was like formulating the idea while you were there, and then why you chose to start this with the folks that you did.
Yeah, so the founding team is all ex-Kraken, but we were not. Oh, that's not true. I was at Kraken, but on my way out. Joseph had already left. John had already left. When we scooped up DK, our chief strategy officer, he had just left. It was kind of people like former Krakenites, if you will. I think what that's done is allowed us to move really quickly because we already have that inbuilt trust. We already know how each other work. We kind of all come from the same cultural background, kind of PayPal mafia style. I guess you could call it the Kraken cabal. And so that just has like cut out any of the infighting that could arise, any of the differences in philosophy or belief, any of the trust building that typically needs to go on when you're starting a company. So yeah, I think that's one of the key advantages of working with people that you've already worked with again. And that's why you see repeat founders with repeat teams. Typically they're like follow-on ventures. Even if their first one failed, their follow-on ventures are more likely to be successful just because they know each other, they've worked together, all that.
Makes a lot of sense, yeah. And you mentioned it a bit earlier when you talked about maybe the difference between like a Solana DAT versus a Bitcoin DAT, but maybe why Solana specifically versus like other alt L1s or emerging ecosystems?
Yeah, I think ultimately when you're going to build a treasury vehicle, what you're doing is you're putting an asset on your balance sheet, obviously. And so you want the asset that's going to have the most upside potential. So I don't want to build a business in grocery stores because the asset is like, I don't like the asset. Mm-hmm. And so for Bitcoin, the asset at the time was a, $1.5 trillion asset, and it was dominated by MicroStrategy. So the upside maybe a little more limited. Solana at the time was, let's call it a $50 billion asset. We started buying it when Sol was at 100. And so $50 billion asset, trillion dollar asset. Like, I'm not saying Solana is going to flip Bitcoin, but for Bitcoin to get to 10 trillion is a lot more difficult than Solana at the time to get to 500 billion. And so from an asset-based perspective, wanting to deploy capital into something that longer term we think has more upside potential. Again, not saying it's going to flip Bitcoin.
Well, just like comparing and contrasting maybe Solana with like not Bitcoin, because I think that's pretty clear, but like other alt L1s that you could have chosen. Like, why'd you guys like Solana so much specifically?
So I think it also comes down to the relative value play. So Ethereum is valued at, let's call it 4 to 5x of Solana. And based on the infrastructure, the scalability, the number of users, the user experience on chain, just all of the key markers for long-term success for an L1, they're leaning Solana. The number of new developers, the list just kind of goes on and on and on. And so because of that relative value mismatch, where the asset is way lower in value, but all the fundamental metrics are much higher, from a long-term perspective, we wanted to build on the Solana ecosystem and Solana the asset. And so, I do think Solana is going to flip Ethereum. Do I think Ethereum is going to die? No. But do I think there's this disparity is warranted? No. I think the gap's going to close. And hopefully for everyone's sake, it's Ethereum goes up and Solana just goes up more, not like Ethereum goes down and Solana goes down less or something. I think this is a rising tide lifts all boats. The pie is big enough for everybody, but I do think Solana has the most upside.
Yeah. Definitely agreed. I think even since you guys launched, Solana's probably continued to accelerate on all the metrics that you just mentioned. And I've spent a lot of time in the DeFi sector of crypto, and Solana is definitely the home of DeFi in terms of like that's where all the projects are launching. It seems like the home of a lot of different things at once. Like they've been saying they're the revenue chain, they're the home of DeFi. They're, I think, like a lot of consumer cryptos being built out on Solana versus anywhere else as well. So that makes a lot of sense. Given that you guys were a first mover or one of the earliest kind of DATs to launch here, obviously a lot's happened since April or May, and a lot of people have copy traded and launched DATs for a bunch of different assets. There's been a whole craze that's emerged. Like, what, maybe zooming out a bit, is your take as someone who was early to this trend in terms of how DATs have proliferated and the strategy has evolved, throughout the summer and then into the fall of this year?
I think the reason DATs have proliferated is unfortunately the quick money grab, right? It's like you announce a thing and then boom, so, in our case, and we got lucky, but we announced, and over the course of 7 weeks, our stock was up 9,700%. Not joking. Look it up. And
pays to be a first mover.
It pays to be a first mover. But even year to date, DATs have been just killed, right? DATs are dead. It's been a bloodbath. Our stock is still up 1,000% this year. And so people saw that And then also seeing what MicroStrategy did in Q4 of 24. And it's like, oh, well, shit, I can just like raise some capital, throw it into a random shitty company, press release, boom, thing goes up. And so I think there was a lot of this, like the bankers were trying to find people that wanted to deploy capital. The investors wanted to deploy capital. And it was just this craze to like replicate that initial hype pop moment as many times as you could. And you saw this with each successive one. The pops went down and down and down until you've seen some lately and they like announce and it's just like straight down, like just front run. Hey, we know where this is going, right? It's typically on some like shitty coin or something. The important part of this though, and I'm not saying we're the only team, but I think there's a very small group of teams that are thinking like we are out there. There's some others though. I think you really need to take a long-term crypto-centric view to what you're building. So you look at our logo, it's a bridge. We're building a bridge from TradFi to DeFi. So our goal is to bridge or to take TradFi capital, stick it into DeFi, and take DeFi returns and stick those into TradFi. And so giving investors a way to bet specifically on the Solana ecosystem. So you could buy the Solana ETF and you're just getting, all what you're actually getting is exposure to Sol, the token, which is pretty good exposure to the ecosystem. But it's a real passive investment. That's what an ETF is, the definition of it. You could also then buy maybe Coinbase, and it's like broad crypto exposure. Maybe you could invest in a fund and that might give you like illiquid exposure to new projects. But for us, because of the active management, we're deploying the capital in DeFi. We run the validators in-house. We get third-party delegation. We do the intelligent leverage approach that MicroStrategy takes with converts and preferreds and that kind of thing. You get this like really explosive package for exposure to the Solana ecosystem. And that's not the case. And, and this other businesses could do the same on other assets if they take a really ecosystem focused approach. But it's not the case if you just grab a bunch of the asset, stick it on the balance sheet, in a Coinbase custody account and call it a day, because then you're actually just a high fee ETF. That's all you are. And so I think a lot of these DATs are going to die this cycle because people are just going to see them as expensive ETFs, which no one wants to pay for expensive ETFs. But I think the teams that are really ecosystem focused, driving value to the asset via active management on top, via the capital markets activity, will kind of survive this bear market, however long it lasts, and thrive on the next, on the other side of it. Just the same as MicroStrategy, went down more in the bear market, and then this past bull market just crushed it. I think you're going to see a few DATs crush it in the next bull market.
Yeah, it makes a lot of sense. And I think you kind of covered my next question, which was like a quick compare contrast of DATs versus ETFs versus like other popular public markets structures. So, now that we know that DATs are or should be, more actively managed, more active in DeFi and kind of doing things on chain, I think you guys definitely seem to be doing probably the most I've seen of any Solana DAT in terms of doing things on chain, trying to generate yield. How would you break down maybe like the top 3 or 4 strategies for you guys in terms of what you're doing on chain to increase SOL per share and maybe like SOL stacked overall? I mean, one way I was thinking about it is like kind of like financial maneuvering or financial engineering, like different ways to acquire more SOL, and then revenue generating. So ways to earn more SOL. But curious like how you think about it internally and what the main strategies or levers are that you can pull to do those things.
Yeah, so at a high level, growing SOL per share, there's like kind of 2 tracks, what I would call your organic yield, which is all the on-chain activity, and then what I'd call your inorganic yield, which is your like capital markets activity. So on the inorganic side, what we're doing is we are accessing capital markets via different structures, convertible bonds, straight debt, potentially in the future, preferred, all these things, and applying that to a Solana asset base. And so as an individual, if I could go out and sell a convertible bond against my own personal Solana stack, absolutely, I would do it. It's cheap financing. Our convertible bond, we did at 5.5%. It's like almost a risk-free rate. And MicroStrategy does them at 0. So that's like the eventual goal. That's really cheap debt financing. But you have to have some economies of scale to actually get that. You as an individual, you can't do that. You can do a margin loan maybe and borrow at 6-7, but there's liquidation risk, right? Our convertible bond matures in 4.5 years or 4.75 years. Sol could go to $1 in the interim. As long as we make our interest payments, there is no default risk. And that is hugely different than, secured leverage in crypto, right? The preferred shares, a little higher. You see MicroStrategy do a bunch. Some of the other Bitcoin DATs we've done on MetaPlanet announced one today. The preferred shares have no maturity. So yes, you have to pay a higher interest rate, typically like in the 10% range, but they never mature. You never have to pay back the principal balance. I would love to take out a loan, a perpetual loan at even a high interest rate personally that I never had to pay back. Like that would be amazing. I would take on as much of that debt as I possibly could. But as an individual, you can't. And so at the company level, you get these economies of scale that allow us to offer a much more attractive leverage package for a shareholder that they just can't get otherwise. Even large hedge funds can't issue preferred shares. They can't issue convertible bonds because they're not public companies. So you have to be a public company to be able to do this. And that leverage is something that's only available to public companies, US public companies. So that's the inorganic side of the table. And it's pretty unique. And that's actually the entire MicroStrategy playbook. That's it. And we see it's really powerful today. But the other side of the house is that organic yield, that organic growth. What can we do on chain to beat the stake rate? Because right now, stake rate, let's call it 6.5%. You just stick it in a validator, a good, high performing, very minimal fee validator on one of the ETFs, and you're going to make 6.5%. Most people, by the way, most individuals might buy on Coinbase and, they might actually be only getting like 4% or something after taxes and huge Coinbase fees and whatever. But let's say the ETF is the benchmark rate. So let's call it 6% after the ETF expense ratios. So 6% is benchmark rate. If we're only generating 6% or even 6.5%, that's not great because we have higher OpEx than an ETF. And so we need to take the asset, deploy it on chain to generate yield. So how do we do that? First off, we've got our LST, DFDV Sol. That is integrated as a collateral asset across all the major platforms: Camino, Drift, Exponent, RateX, Loopscale, Fragmetric, list goes on. So we can use that as a collateral asset to, for example, borrow Sol, liquid Sol, as long as the interest rate differential is positive. So let's say the LST is yielding 6.5%, and we can borrow Sol at 50 basis point spread. We can loop that. We could do a couple terms of leverage there, generate a couple extra 100 basis points of yield. Great. We could also, for example, borrow some stables against our LST and then deploy those stables in higher interest areas. So maybe right now on Camino, you can borrow PyUSD at 2%, and you can lend USDS at, let's just call it 8%. And that opportunity may not exist for very long. Maybe it's a couple months. But in the meantime, we're capturing a 6% spread. And then if, Solana markets start to move against us, we're getting worried about a margin call. Cool. We just unwind it, do that in 15 minutes. Boom, we're safe. And the whole time we've been capturing that spread there. And we can move around to different things. We can do yield stripping, a bunch of other things that we can do on chain. And then there's also some potential things we can do off chain, like buying discounted locked Sol, which is yielding about, let's call it 15, 16% annualized right now, between the staking rate and then the amortization of the discount. You got to buy those in large blocks. Most people can't. We can as a large buyer. So it's another way that we can add yield back to shareholders. So a whole bunch of things, economies of scale that some active management can provide that, maybe a hedge fund could do, or maybe an individual could do, but it's a lot of work. And obviously then you don't have the combination with the inorganic, public company financing. So I don't know, I've talked a lot there, but holistically, it creates this really, I would say, attractive package for long-term Solana appreciation, where let's take a 5-year window, we can grow Solana per share faster than any other vehicle out there. And so if you believe in Solana the asset and Solana the ecosystem, we think we're the best way to hold SOL on a long-term basis.
Yeah, that Galaxy, I think it was like the Galaxy FTX estate deal maybe like a year or two ago was such a good deal. I wish I had heard about it or had the size to get into that. But I think it was like at $60 or something crazy. And the unlock happened in March. But I think that all makes sense. What about potentially like acquiring other SOL DATs, especially as time goes on? Or I saw you guys have done some seeding of other Solana DATs internationally. So maybe if you could talk a bit about those two strategies and how you see them playing into the overall.
Yeah, so I'll take those in reverse order. The international DATs, which we're calling our Treasury Accelerator program. So we've announced DFDV UK, DFDV Japan, DFDV Korea. And UK is actually in market. There's a public company, a ticker you can go buy, although we haven't gone through all the regulatory hoops to put the SOL in there yet. And then Japan and Korea are still yet to launch. The idea there is same playbook as what we're doing, but for those local market investors. And those investors can invest in US companies, fine. But there's two primary advantages to having a local entity. First off, taxation. So in many cases, foreign investments are taxed at a much higher rate than local investments. And actually, interestingly, in Japan, and this is why Metaplanet has been so successful, in Japan, coins are taxed at a much higher capital gains rate than equities. So stick the coin in an equity and you've just cut the tax rate by something like 50%. Huge amount. And so there's, other tax arbitrage opportunities. There's the ability to get buy the equity in your tax advantaged account, your whatever the version of an IRA or a retirement account is in each of those countries. Get them into local mutual funds. There's a whole bunch of new pools of capital that a local investment has access to. So we think it's important to launch same package, same strategies, modified slightly for the local market, but same rough approach, but in a local vehicle. So that's the first one, is all the taxation and regulatory components. But the other one is local marketing. I don't speak Japanese. I don't speak Korean. I live halfway across the world. We want local people on the ground telling the story, going on TV, going to the meetups, going on the podcasts, all of that. And I think it's very important for, local folks to be speaking to, the local folks, right? They're going to connect better. They're going to be able to modify the brand to best match what's going on in that market. And so those are the two reasons for us to help launch these international vehicles. In terms of the M&A, the roll-ups, people have been talking about this a lot. Oh, there's 7 SOL DATs or whatever. There shouldn't be 7. Maybe there should be 2. So someone's just going to come in and roll them all up, right? Sounds nice. The problem is typically when you do M&A, it's because the value of the equity in the business is below that of the asset, or what you think the asset is worth as a business. So you're a trucking company and you're like, hey, look, the stock is trading at a discount to the value of the assets in the business, their customers, their trucks, their software, whatever. The problem here is, unless there is something truly unique that cannot be replicated about a DAT, their asset is just a liquid commodity. All right. You can also just go buy the liquid commodity. So for it to make sense for the acquirer, in most cases, they have to buy the liquid asset at a decent enough discount to cover all the legal costs and all the headache from doing M&A and legal risks of the, existing company, the shell company, whatever. But there's no reason that an acquiree, a target, would sell at a huge discount, because they can always just go sell some assets, sell a little bit of SOL, to buy back their equity, and boom, it comes back to 1x. And there's no more discount anymore. And so unless there's some other major strategic advantage, or maybe the teams like really get along together, or there's some other like super valuable asset, I think it's actually going to be very hard to do a lot of M&A. And I think you're going to see deals being done very selectively here and there. But I think you're going to see a lot of zombie DATs out there that just kind of hang out. And because, this is a double-edged sword, because of these assets are generally rising, especially the majors, right? BTC, ETH, SOL are generally rising. You can kind of just wait, and the value of your asset base is just going to kind of go up. And as a management team, you're just like, sick. I can sit back and collect pretty fat comp packages, not do anything, just fend off, hostile takeover attempts. So I think it's going to be hard to get a lot of M&A done. There will be some deals, but I don't think it's going to be like a massive roll-up spree.
No, that's a great take. And I think it's contrarian, but I think what you said makes sense. Like DATs are a very unique kind of business in terms of the business that they're in, and also like the liquid asset that they hold. And it feels like for DATs that aren't doing that much active management, especially, like there's less of a moat in terms of like the value of what they're doing versus like a trucking company that has customers and services and products and revenue and all that. So that makes sense. Let's talk about MNAV multiples real quick. So I think like generally you noted earlier, there's all these DATs now. There's been some compression. How have you guys been able to maintain an MNAV of over 1.0 while the rest of the market compresses? Like what do you think you can attribute most of that to? Is it how much you're doing on chain? Is it storytelling? Is it being first to market? Because that's obviously an important number for you guys.
Yeah. If you look at our website, we are just slightly below 1 actually on a fully diluted basis.
Oh, really?
Okay. We've kind of oscillated around 1. I think where a lot of the value comes in is that first mover advantage. It's being first to market. And so there was a period of time where we're the only DAT in market. And so we captured a lot of the mind share, a lot of the excitement. We still typically have the highest volume of any SOL DAT, and pretty high volume on a relative basis relative to our market cap. And so that matters, and liquidity is vitality. And so that volume kind of begets more volume. And it's kind of the attention and the mind share. And so all of that flows into some level of network effect. I mean, we're small. We're not a MicroStrategy. We're not BitMine. And so, we don't have this massive liquidity edge, but I do think that's a key piece of it. But then the other important piece is our engagement with the community. And so this is our marketing. This is reaching out to, communicating with folks in the community, going to the events, doing the shows, being transparent. Go check out our website. It's far and away the best, most transparent metrics website of any DAT, safe, MicroStrategy, and maybe Metaplanet. We've got all the metrics up there. We're very transparent about what we're doing. And so I think that builds trust. And so ultimately, a lot of this comes down to trust. Because yes, we have all these advantages, right? The active management, the intelligent leverage, all that stuff. But if the team is full of idiots, or they're full of shysters, they're trying to scam you, then you should just do it yourself as an individual, or stick it in an ETF. So trust is a huge component. And I think we've done a decent job of building that trust. I mean, we have a long way to go. We've only been in the market for, 8 months. But I think that trust becomes a key advantage long-term.
Yeah, you do the podcast too. I've seen you guys have been on a bunch, and I think it helps to tell the story long form and put a face to the name and all of that. Maybe pivoting a bit to more macro, like, do you think we're headed into a bear market? Is the 4-year cycle, is it somehow still holding true, given like recent price action, or do you think things have changed and that doesn't matter as much anymore? Curious your take on that overall, and then maybe how the strategy changes in like a bear market versus a bull market for you guys.
I think the 4-year cycle is dead. And I think now what we have is an asset class that is just mega high beta NASDAQ or mega high beta tech. Essentially, if you look back, 2021, I think was the end of the 4-year cycle actually. And that's when, MicroStrategy came out, and I think you had enough access to Bitcoin to allow TradFi to make bets on crypto. And so if you look at 2021, yeah, sure, crypto sold off on the 4-year cycle, timeline, but equities sold off at the same time, and they really correlated. And when equities started to rebound, Bitcoin wasn't far behind, and Bitcoin kind of led the way down, but they were pretty closely correlated. I think that has only been amplified now, where you've got all the Bitcoin ETFs, ETH ETFs, you've now got Sol ETFs, you've got all these DATs. There's so many ways for TradFi to make bets on crypto. And so I really just think investors globally look at crypto as this mega high beta tech. And so, you could say, well, this summer AI has been ripping and the Nasdaq's been ripping, and, crypto's been, kind of flat. Okay, there may be some periods where there's some dislocation, but I think generally speaking, in a bull market, crypto's just going to outperform equities. And in a bear market, global macro bear market, crypto's going to underperform equities because it's just that real high beta. And I think underpinning that is actually liquidity. I think markets now, risk assets in general, there's some gyrations around the fundamentals. AI is hot, so AI is doing better. But I think fundamentally, risk assets, it's just a liquidity play. And I think if you just stripped out liquidity injection from the system, and actually you look at this, like Fed balance sheet and stuff, like equities have been flat for the last 30 years or whatever. And so I think crypto is the best way to run the liquidity trade. And because of that, it's going to respond most violently to changes or concerns about changes in liquidity. So this recent, maybe the Fed's not going to cut in December, and we don't have the data out. And even this morning, it was like BLS saying, hey, employment data is not going to come out till after the Fed meeting in December. It's like, well, what's going to happen is the easing cycle going to pause for a month? People flipped out, crypto got hammered, and it has been getting hammered more so than equities. And so I think the 4-year cycle is dead, and I think crypto is effectively just super levered tech, which ultimately is a play on liquidity.
No, I think that makes a lot of sense. I agree with a lot of the different points you made, but the timing of the sell-off, I think, is really interesting. We're kind of still lined up with a 4-year, we're in November of the 4th year, and everything's peaked and selling off. But I think there have been meaningful changes to the factors that have created this 4-year cycle in the past. Every time the Bitcoin halving happens, I think it's less impactful, given the nominal number of coins that are, or emissions are getting halved is much smaller. And then also there's way larger non-crypto TradFi flows that are involved here, especially with the majors like Bitcoin, that you would think would provide more of a bid through bear markets and maybe a higher floor and stuff. So there's been a lot of changes, but it's crazy to me, a couple cycles in, seeing this self-fulfilling, maybe it's self-fulfilling prophecy, right? Everyone thinks we're going to sell off this month, so everyone starts selling. But we could easily turn around in the next couple of weeks or something, and then, it'd be a fake out, and we're not going into a multi-year bear market. Who knows? But
I mean, look, NVIDIA beat earnings, and the NASDAQ was up 1% or whatever after hours and into this morning. And Solana was up 6%. And our stock was up 12.5% or 15% at the open. I mean, it's
wow.
This thing turns around and boom,
crazy.
I think this stuff's going to just rocket. Now, that doesn't mean we don't start a macro bear market here. And if we start a macro bear market here, maybe the macro cycle is every 4 years now. I don't know. If the macro cycle is every 4 years, then crypto's back to being every 4 years. But I think it's just going to follow the macro cycle.
Yeah. Regardless of when the timing of bear markets and bull markets are, when crypto prices are generally down a lot versus up a lot, is there a meaningful change in strategy for you guys in terms of buying or selling, or operationally? Like, is there a difference?
Yeah, I'd say there's some tweaks around the edges. Maybe that's a little bit too light, but it's, not like wholesale changes. So, we're not trying to time the market, right? We're not selling SOL and then trying to buy it back. I'm not running a hedge fund here. But, we might spend less on marketing because there's less attention on DATs and people don't want exposure. Surprisingly, people only want to buy the tops and they panic and sell the bottoms. So welcome to, investor sentiment and, market ethos or consciousness or whatever. But so, some changes in marketing. Certainly we can't do large fundraisings. It's much more difficult, especially on the debt side. Debt investors are like nervous when your equity value is going down and getting cut in half, in the course of a couple weeks. But on the flip side, if our equity starts trading at a pretty strong discount to NAV, because investors like short-term investors, the tourists, they are like panicking, they're dumping, whatever. This is an excellent opportunity for our long-term shareholders because we can come in, we can do buybacks, right? We generate free cash flow, generate revenue off all our staking that we can sell to do buybacks. We're also not opposed to selling a little bit of SOL to help close that gap, because what that does is that's SOL per share accretive. That's us saying, hey, all right, tourists, you want to sell us your stock at a discount? We're going to accumulate that for our long-term shareholders. And I personally own like 10% of the company. So when I say our long-term shareholders, I'm just being selfish and like accumulating value for myself.
Important to be aligned. Yeah.
Yeah, for sure. And so we can grow SOL per share and generate value long-term for shareholders in both environments. Totally beat up. DATs are dead. Trading at a big discount. Cool. You don't want your shares? We'll take them off your hands at a discount. Great. Market screaming. Everyone's excited. We're trading at 10x NAV like we were back in May. Sweet. Market has a high demand for our shares. We will sell shares in the market. We'll raise capital, buy as much SOL as we can. And we grow SOL per share in both environments. And so I'd say the shift in strategy is mostly around what we're doing with capital as it comes in and our capital base. Are we buying back shares, or are we focused on accumulating as much Solana as possible and selling shares? And we kind of got this all-weather vehicle where we can, shift it into 4 low, to go through the bumps, or we can drop it back into 2-wheel drive when it comes time for the highway.
100%. Well, cool. What's next in 2026 for you all, and anything else you want to cover maybe that we haven't touched on so far?
Yeah, I think, the big thing is just to continue our integration in DeFi. So we've got our tokenized stock, which is out there, but candidly, it's not very liquid. We want to help boost that and grow that. We want to launch, we've been very public about launching our preferred stock. We'd love to get that on chain as well. We want to do more partnerships and integrations with projects on chain that are, building liquidity products, whether that's, private AMMs, maybe that's token launch platforms, maybe that's, real world assets on chain, maybe that's perp dexes, options, zero DT options, all sorts of things. And so to the extent that we can further integrate with these projects, further help them succeed by providing liquidity, providing attention to them, I think our value as an ecosystem player grows and, ultimately helps us cement our own destiny, where if we can help drive the ecosystem forward, and by extension, drive the asset forward, we're expanding the dollar value of our balance sheet. And so it creates this virtuous feedback loop. And I think you've seen MicroStrategy do this to an extent, right? Saylor is this massive marketing champion for Bitcoin. They don't do anything in the Bitcoin technical or on-chain ecosystem, but Bitcoin doesn't have much of that, mostly just marketing. So maybe it's fine. But we want to do the same thing. And we both need to do the marketing for the ecosystem, but also that kind of technical liquidity provision component to help drive the ecosystem forward. So, we've only been operating for, again, say 8 months, and there's a lot of work to do there. It takes time. It takes time for our auditors to get comfortable with what we're doing and to build out all the infrastructure around that. And so that's what we're really focused on, for 2026.
Well, I think you're doing a great job of the marketing.
Thanks.
And appreciate you coming on and sharing what you guys are building with all our listeners.
Thanks for having me on. Really appreciate it.